perhaps start off recapping on the kind of reaction we saw from the local unit or non-reaction to that MPC announcement yesterday. Pretty much anticipated that the governor was going to keep rates on hold at 5.5%.
Yes, Alishia, I think that really was the crux of the matter, that the repo rate was finally left unchanged. And because that was in line with market expectations, I think also the tone of the MPC statement wasn't especially dovish or especially hawkish. So we didn't see much reaction from the currency. It just sort of seemed to move sideways after that announcement.
Taking a look at the kind of commentary that came through, Joe Marcus seeming to be a lot more hawkish, on the prospects moving forward. Nomvuyo, how did you digest that news and what have you made of it?
Well, certainly, Alishia, it seems that there's some market commentators or part of the market that certainly thought that the statements were more hawkish than usual. And that certainly wasn't our view. We thought that the tone was pretty much in line with what we had expected, because we've known for some time now that the Reserve Bank does find itself caught between these competing forces of rising inflation on the one side, but slowing growth and substantial downside risk to the growth outlook on the other hand. So I think she really just emphasized both of those points again. And I certainly wouldn't describe the comments as being especially hawkish. But having said that, in the question and answer phase, she was asked whether a rate cut had been discussed. And if you'd recall, at the previous meeting, she indicated that it had, and now indicated that there had been no such discussion. So I think that may have been where people really read into the fact that the MPC hadn't even considered a cut and interpreted that as being more hawkish.
Are you reevaluating or reassessing the kind of downside risk that the global economic story presents for the markets right now, Nomvuyo? Because we've had, as we were saying earlier, encouraging data filtered through from the likes of China, but also from the likes of the US in the form of economic and corporate news.
Well, certainly there's some encouraging economic data out of the US, but I don't think that that has forced a revaluation on our front. We've always seen the primary risk for South Africa as emanating from Europe and the potential that that crisis has to deteriorate even further. So as far as the euro is concerned, nothing's really happened there that would have made us reconsider. But certainly it does seem at this point that the US is going to skirt a recession and growth in that country is looking healthier. But we see risk to the US economy then also emanating from Europe. So certainly the global outlook, no one's safe, and still lots of risks ahead in 2012.
With that, the maintained position on Europe, does it surprise you the kind of reaction we've seen on the bond issuance front, yields coming down on those EU treasuries?
Absolutely, but in large part we think that that's been due to the activity of the ECB in supporting those markets. But certainly, the reaction to that has been quite positive. We have seen yields come down, and I think that's also filtered into global confidence, and part of the reason why markets have been so optimistic over this last week and a bit.
And do you think that this risk on that we're seeing now, that we might see some funds flowing back into South Africa from abroad into our equity markets and bond markets seeking high yields, and that that can impact very positively on the rand? I don't know what your outlook for the rand is, but that can we maybe see 750 again?
I wouldn't want to say that we could see 750 in the short term, but we do see the rand strengthening in the second half of this year. So to specifically answer your question, yes, there is the risk that a sort of a speedy resolution to the Eurozone debt crisis could see some normalization in financial markets. There could be a continued inflow into emerging markets in South Africa, and the rand would certainly benefit. But that isn't our base case scenario. We don't see any signs that the situation in Europe is going to be resolved in the short term. So we are seeing some rand strength filtering through at the moment. As I mentioned, markets are quite optimistic currently, but we think the broad trend for the first half of this year is still going to be heightened risk aversion, even though within that broad trend you're going to see periods probably of rand appreciation.
And we do have spurts of data that support your view, Nomvuyo. I mean, today that flash PMI number coming through from China and reminding investors of the impact that the Eurozone's debt crisis is having on an economy like that.
No, absolutely, and that was quite a disappointing result, that flash PMI coming in again below the 50 level, and that was for January. We just recently had South Africa's PMI for November, so there's still some catch up there, and as far as our local manufacturing sector is concerned, certainly the outlook, if you take global PMIs as being a leading indicator, then the outlook for the domestic sector doesn't look healthy at all.